Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday edition, a very special Wednesday because, as you guys may have noticed, we had some pretty major announcements today. Jerome Powell and the FOMC coming out with their statement with regards to rate announcements, which of course was 75 basis points, and of course that had huge implications for our financial markets going forward, from interest rates alone to bond products to just indexes and even emerging markets. We're going to talk a lot about forex, specifically spot forex today. I can't even get my tongue untangled. I don't know what it is. No, haven't even had whiskey yet. That's for Friday. No whiskey yet. We're going to have a conversation with David Warner talking about riding the wave of the dollar. As you guys know, on this show for the past months and months and months and months, we've been talking about how strong that dollar is, don't see it stopping, and of course, if the rates were increased today, thought, well, we'd see an even bigger surge in the dollar, which lo and behold, we did. So we figured, well, let's have a show where we talk about trading the U.S. dollar. David Warner joining me from New York. David, how you doing, my friend?
Hey, Merlin. It's great to be here again, buddy.
Always good to have you on the program. I don't get you on enough, unfortunately, but
I know. We got to do this way more often.
We should. Huh? What's new in your world?
The same thing, man. Same thing every day. Just repeat. I'm doing good, man.
That sounds kind of boring. We see everybody here is coming off this whole COVID thing. We're out of it right now. We need to live vicariously through you. You got to come up with something exciting.
Time, man. Like, I'm doing something every single day. I mean, it's just awesome.
Oh, I forgot we're supposed to wear Katuch shirts today.
I forgot too, man.
Well, we're not going to change live on air, folks. Katuch, we owe you one. Dab Nab, we were supposed to wear those today. I totally forgot. Yeah, I need to hear you be. We need to live vicariously through you. So I'll let everybody know. I'm just going to make up a fictitious slide for David. He's now trading forex for Credit Suisse. He started a nighttime job where he's a stripper for Chippendales, and in his spare time, he likes to help out with the homeless children's shelter. So just really thought that was just a touch up for David Warner there. See, it sounds better. Embellish.
That is way better. Yeah, but it's all true. Everything you said is true.
Yeah, it depends. It depends, but yeah, I was just about to throw a Sam Seiden joke out of the way. If it was true, if we worked for, never mind. Anyway, we won't go there. Let's go into the Fed announcement today. FOMC, Jerome Powell, 75 basis points. He had some pretty sharp words about the economy and markets going forward. Love to get your take on what he said and what it means to you and your trading.
I honestly, I wasn't surprised really by anything today. I mean, it was everything was pretty much priced in. I thought that we would get, I thought that we could potentially got some type of slowdown on the dollar, or some type of way to try to slow down the dollar. The dollar has been on just such a tear, and it's never really it's always very, very dangerous to kind of pick tops and bottoms. You know what they always say about picking traders and picking tops and bottoms.
Stinky fingers.
I ate stinky fingers, graveyard filled with people that were right, just too early, all that kind of stuff, man. But, can I share? I'll just share.
Yeah, I've got the dollar up here, but yeah, share your screen anytime you want.
Yeah, so I'm going to, hold on one second. Let me just make sure to get the one that I want to share.
No problem. As you share that, let me ask you a question. You mentioned, the dollar strength and picking tops.
Yeah.
Before we start breaking down exactly all the levels and zones, I got a question of, what do you think it's going to take to slow down the dollar? I'm looking at all the actions that are happening right now, and we covered this in the show yesterday, actually several times over the past few weeks, which has been really, you've got a situation where the Fed is unwinding their balance sheet. He even made a statement today they're going to be more aggressive about the unwinding of their balance sheet, which means removing money supply. So you have more dollars taken out of circulation, which drives the dollar up. Then you have the carry trade, which now today, if you hold the US dollar or JPY currency pair, you make an extra 75 basis points. So more people are going to buy dollars. I just don't see what would cause the dollar to go down. It just seems like there is no reason for it to go down right now.
I agree. I'm not looking for a complete directional change. I just thought that we could get something where the brakes are pumped a little bit, and we can just kind of get some type of correction. I think fundamentally, I think that it's still the story of the dollar and the Fed is just so much more aggressive than really all of the other trading partners. I'm actually like in particularly, I don't know if you can see my screen now.
Yep.
I'm looking at like dollar
Yeah, we see your
Japanese yen.
screen. Yep.
Yeah, so this currency is really the story of central banks, the way that I've been kind of viewing it, because United States has been the absolute most aggressive in this tightening cycle, where Bank of Japan is just like, yeah, we're not doing
We're not
anything.
doing
They have
anything.
not
Like,
literally done nothing, and like so today I thought was like could be like a day where you could kind of have some type of like just some shift, not crazy direction, trend change, but I thought like, okay, well maybe the Fed is going to just kind of show something where maybe they're like, okay, I even thought that when they started talking like, okay, well we have 50 basis points, like what he did today, like 50 basis points. I was already under the impression that 75 basis points was starting to be priced in for I think November, and I think that, and he's like, no 50, so I don't know, like, but this pair, we actually have the Bank of Japan tonight, and I thought that like, this currency pair, you see that purple line?
yep.
I'm kind of pointing at it right here. That's 145, which is like, it's such a big, huge kind of round number. Bank of Japan got around 145, and then all of a sudden you have Bank of Japan kind of going in there and saying we're checking rates, which is just like a free way for them to kind of like try to talk down, or excuse me, not really talk down, but kind of talk up their currency, like trying to strengthen their currency a little bit. If you look at the bank, if you really look at like dollar yen, I mean, this pair is up 31%, in 1 year. You got 25.16% year to date, this was up about 7.5%.
And I think most people, Dave, when you hear those numbers, like 22%, like they're like, so what? I'm in GameStop and AMC. This is an economy. This is a global currency. I mean, this is incredible to have those kind of ranges.
Yeah, this is absolutely incredible. Like, I have never really seen this in all of my currency trading career. The last time dollar yen was at these price levels, I was still in high school. So it's crazy. Like I've never really ever seen this. So I thought that, the Bank of Japan maybe could have some type of like policy shift. I was like, here you are kind of looking at it on just kind of like 4 hours. This is just kind of like the, kind of the most whatever. But if you really just kind of step back at this, and I'm just going to kind of hide this real quick, hide my lines so it's not so much going on here. And you just kind of look at this. This is, I mean, here's the weekly. I've never seen it. You could have maybe, this run here, which I guess you could, there's obviously this, but like, I don't know, man. I've never really seen it kind of like this. I was just kind of really, kind of looking more for correction, even as like, as far as all the data and history that I can have, like we don't even have anything. I can even go further back. I know obviously there's obviously more data, but like, I just have nothing that I can even kind of really work with. So I was just kind of like, kind of going off of, kind of these big price points that I have been using. So, it's kind of like it's a little bit of a dangerous move. I just thought that like, you can just kind of see that even the trade, kind of the way that I have it up, like the risk reward looks pretty good with kind of what I have on the screen.
But you're looking at going short in the dollar.
Yeah, this is kind of like a short thing, because like, honestly, from this point forward, to kind of chase this thing higher into and above 145 becomes a little bit of a little bit. I know this is like, obviously the trend is my friend. The trend is my friend. But you're kind of like, after you get past that 145, you kind of already have the Bank of Japan kind of like, kind of eyeing, just kind of eyeing the exchange rate. This thing could obviously go, kind of higher. It's just like, as far as if I can keep it under 145, I'm going to try to do the short. It gets above 145. It's just, I'm not going to try to chase a short out of this. I'm just kind of using kind of a Bank of Japan as kind of like a potential, like, hey, here's your
they'll backstop their currency
ceiling. You know what I mean?
But they haven't done anything like that yet. You know what I mean? They've been on the sidelines. And there's two things to point out here. So the viewers at home, you can see David's chart. I'm going to switch to mine real quick. You can keep yours there, David. I just drew out some So this is the same chart, just kind of zoomed on that 4 hour. One thing to notice that is this is an ascending triangle right here, which is technically a very bullish pattern. So I'm just saying this as a disclaimer because David is good about discipline and risk management. So if it gets above 145, he's out of that trade, no problem. And the odds are pretty good that it could break to the upside here. However, you look at what's gone on with the dollar. Here's the dollar index. It's had so much momentum, so much surge. Now all of a sudden you got the 75. It's pretty clear we're going to get another 75 in November. Maybe there is time for a small little pullback here in that dollar index. Just throwing a hypothesis about why this thing might sell off.
That's it, man. To be honest, like I know it's it's kind of it's I've been I've been doing a lot of these classes, do a lot of these like online kind of meetups and groups and classes and everything. And it's always been this story of, okay, well, we got to buy things against the dollar, or excuse me, buy the dollar against things. Right. Yes. And, it was really buy things against the Japanese yen. I mean, that was just kind of like the go-to side of things. And, just here lately, as we kind of enter into kind of all of this, like, kind of this central banks where they all kind of start rolling things kind of all at the same time. I just thought that this would potentially be an area where we could get just some type of little something, you know what I mean?
Yeah,
but
absolutely.
But I think that dollar yen has never even really been it hasn't really been a pair I have looked at a lot until here recently, and it's only because it's kind of at these levels that we haven't really seen and for a very long time, 1998, and now all of a sudden the kind of the dollar strength is this it's this constant kind of theme, and this like yen weakness is this like constant theme, and there's the only thing that can really kind of cause things to kind of really change is that you need shifts in policy. So like really I guess like you can kind of see like the dollar not it's like this isn't really a very impressive Fed day to be honest for me. Typically like I just didn't really there's not like I usually see way bigger moves than this. Like I've been looking forward to this day and just really thinking, wow, this is going to be a really giant day, but I look at like the dollar yen for today and you look at the percent and it's freaking flat.
Yeah.
You know what I mean? It's like nothing. I'm like, they're not going to get my popcorn out for nothing, So
well, it's funny. I was talking on the show yesterday, talking about what's the typical whiplash, action that happens when the Fed's announced. And let's see if I can bring up let's go to the 15-minute here, or 5-minute for everybody at home. Here's the dollar, but like if you look at the equity indexes today, you had just such wild swings on a short-term basis. Let me get to the 5 here for everybody. I'm sure you all saw this, but this is just a crazy whip up, an amazing whip down, all of a sudden broke to new highs, and then just fell apart near the end of the day and still going down in after hours. I mean, this is typical of a Fed day. Normally, what in my experience, it has a big move one direction and then rips the opposite, and then the third one is generally its overall trend. We didn't get that today. We ended up on a very sour note here. But to the question here, Chase says, will the dollar start looking choppy like it had the blow-off top in 2001, 2002? Becomes more difficult to manage a trade when it gets lofty like it is. And absolutely. When something's at all-time highs, not all-time highs, take that back. When someone's at a very extended high, what usually happens is people get fearful of jumping on it because it already left the station, right? It's already got that momentum and moving up. Then all of a sudden, it seems like right as you buy it, that's as soon as it tops out. And I think that the probability of getting those whipsaw actions where things whip the other way are much higher in something like the dollar in a situation right now where it's just ripping straight up in price behavior. So,
yeah, I 100% agree. Like it's I think we could get into a little bit more of like through the dollar, like if there are more gains, I kind of do agree that it's probably going to be going to be more of a grind to the upside than just these huge green candles. But
Well, I'll show the viewers here just so, because you were talking about the Fed funds rate, just so we can kind of put into perspective what the expectations are. Here is the November expectations on the Fed funds futures. You can see right now they've already priced in a 62% chance of a 75 basis point raise, only a 37.8% chance of 50. Now, if you listen to the Jerome Powell talk track, which we'll talk a lot more about with Bill Addis tomorrow, he was pretty pointed. He said, look, we're going to keep on those rates, keep on raising those rates until we feel that everything is under control and inflation's under control. And then he said, we're going to moderate demand. We will see a sustained period of below normal growth. So these rates are going to continue on up. Right now, for the end of the year, they're expecting it to be 61% chance of 4.5. So if we're currently at 3.25, you have another 125 basis point raises by the end of the year. Just, price that in. And when you look at something like the US dollar, I think that, if you look at adding in another 125 basis points, we've been targeting this 130 level, 113 level on the dollar index. Let me bring up your weekly here so everybody can see it. It's hiding off the top of my screen, but there's your 113, right? 113, I had 113.80, but it's 113.50 was the number I'm looking for. We could see that very soon as the reality of these further rate increases settle in. Now, David, you spent many years analyzing forex markets. How significant are these raises going to continue to push this dollar up? Do you see it? Because, it just seems like it's just adding more and more fuel to it.
It's everything, really. You look at currency valuations. The very first thing, especially when you're trying to build a pair, you look at interest rates. Interest rates you typically look at first. It's like which currency, what paths are they on? Who's the currency? What's the central bank that's raising the quickest? Who's the central bank that's the slowest? And you've created pairs and major changes in currency valuation. It's all driven really by interest rates. That's why the dollar is where it is today. That's why Japan is where it is today. And that's what we were kind of like when we started talking. Like you were 100% correct. Like the story, the fundamentals. Like there's really nothing really right now that's changing the the narrative of the dollar. Right. This is I keep saying it. This was just more of a kind of a check on especially like the dollar yen I was showing. It's just like kind of like here's that big price level. I love the big price levels. The big price levels. If there is a spot where I'm going to try to review to try to reverse something, I love those like 145. Just this big huge round number. And it was that big 145 that kind of caused the Bank of Japan finally just to kind of peek its head out from behind the curtain and be like, hey, we're keeping an eye on this. You know what I mean? Mm-hmm. So it's like, I like to use those big price points.
Yeah, absolutely. One question or comment, Sava says, can other countries' printing of money affect this? If so, how much? Of course it does. I made a comment the other day and some guy was scoffing at me on social media. I thought it was kind of funny. I said, we're in the midst of a global currency war. And it's not just the U.S. actions, right? Our Federal Reserve is the most powerful of the central banks. But you've got, the ECB is a huge factor. You got the Bank of England. You got the Bank of Canada. You got Australia's central banks. So all of their actions will impact their specific economies. I think David and I at the top of the program were kind of laughing because here's Japan going, we will do nothing. They've been at negative 0.1% forever.
Yeah, but it's crazy. Like they're not even really getting any real inflation over there.
I don't get
it's like I just really don't understand it. I thought that we would get some. I thought Japan. I thought you would start showing up. I'm very, very interested to see what the Bank of Japan does tonight. I was actually more excited about the Bank of Japan this evening than I was actually the Fed, because the Fed was pretty much like, okay, there's not going to be any real change in policy, but like with the Bank of Japan, just the way that their currency has so devalued that I thought that maybe there could be some little shift, verbiage, something.
Well, even the Swiss National Bank, right? Swiss National Bank was at negative 0.75, then they raised a negative 0.25, and now they jumped into positive territory. So even the Swiss National Bank's like, hey, listen, we got to do something here because inflation is going to kill us. But, so some people who might not be aware of how this impacts Japan's inflation rate, think of it this way. if I look at this price chart here, going back to, we'll call it January of 2021, the US dollar has increased in purchasing power 41% against the Japanese yen. That means you can buy 41% more. So if I'm an importer from the United States buying from Sony or PlayStations or just products I have to buy in yen, I am able to buy so much more. Now, if you have demand for Chinese goods accelerating because now we can buy more at cheaper prices, so why wouldn't we? We'd make more profits in the US. That should drive up inflation in Japan, and I just don't get it. I'm looking at the CPI numbers for Japan. They're showing no inflation and really no reason to increase their central bank rates, which I don't get it. I've got the Merlin name, which is magical, but the real magician, whoever is controlling the Japanese economy and not letting inflation affect them whatsoever, blows my mind.
It blows my mind. It really does, man.
So let's go back to another one. So for a long time, you were very bullish on the British pound. You're like, I'm bullish. And then we talked, I think, earlier this year, and you're like, nope, that ship has sailed. I'm bearish on it. Go short that British pound because of the trends. Let's take a peek at that British pound because it is.
I got the chart. Can I pull it up mine?
Yeah, let's do it.
All right. I 100%, I was looking at, it's just, you're right. A couple years ago, I would have been just buying the crap out of this thing. Then it's like selling the crap out of this thing. And recently I just been trying, I was kind of looking for areas that I might, try to get a little bounce. And I thought I could time everything around a Fed or something. I was trying to use this channel that was created from here's May 12th. And I could see, so, we had some pretty significant, kind of little, kind of bounces off of there. So I thought I would get, a little bit more of a bounce out of this, but we've even broken, even below this channel, which just doesn't really, do great. But, it's like, I'm getting into this, here I am, I'm hitting another, what I would call a pretty significant, price point for me, this big, this red line, which is, I call it a big round quarter. And who knows if I can get back onto the other side of this trend line, maybe I can kind of use it again. But the euro, you think inflation is out of control here in the United States, the whole Europe area is doing so much worse. As far as inflation is concerned in the United States. And it's going to be kind of scary to see what happens, when it starts getting cold and, with energy and Russia and all this kind of stuff. And, this is, the pound dropping and the euro dropping, a lot of that has to do is Russia, Ukraine, crisis. And, the pound was kind of an interesting one. I was just trying to watch it a little bit more just because of how much it does drop. This currency hasn't been this low since I think the year is 1985. I think I have that right.
Yep. It was at 105. And I'm watching it because, I'll throw a really crazy hypothesis out there. What about the British pound getting to parity?
Yeah. I mean, that's a very real potential.
I know, it's crazy.
It's insane. And but you know what? I thought that this was, I don't know if you can still see my,
we're watching your screen. Yep.
There's these kind of interesting kind of, kind of things that are coming up. I thought, kind of with the, with the pound, I don't know if you saw this headline, but Bill Gross is long the pound after plunge, dollar overvalued. And it's an interesting kind of story to read about, and, reasons why Bill Gross is going long pound. He's even, kind of talking about it or whatever. But, I kind of started to kind of look at that. And now I started to kind of look underneath me and I'm like, okay, well, where are kind of these big levels where I can, if anything, just maybe take a little, stab. I was trying to use this trend line. Obviously, you can see it did not work out for me, but I was trying to kind of play just this, kind of in this channel, but obviously didn't work out. So
everything works until it doesn't. I mean,
that. I know, but it's tough because I think you are correct in this whole could pound get to parity. And there's already the euro is obviously already below parity, and there's talks of the euro falling to you got your first target 95 cents. I think even the last time we were on here we were talking about even 90 cents. But the euro is just it's not as fun. I just don't really enjoy trading the euro. I feel like the euro tends to kind of do what you were talking a little bit earlier, is just kind of like it gets stuck. And it just kind of like it's got a lot of just consolidate. It kind of like consolidates for extended periods of time. Like it's for as a trading, I know it's like the most popular currency pair on the planet, but like for trading, I think it just like
Well,
I
maybe
don't
for
really
active
like
trading,
it.
but as an investor, I mean, come on, look at that trend for this
I
year. I mean, it
know.
does not get
Yeah.
much better than that.
Yeah, 100%. Yeah, but you know, like right now, this thing, you know, below a dollar, kind of the way that you know, just kind of playing the levels. You know, you got to take them, you know, kind of one big quarter at a time.
Yep.
You know, so just kind of throw some of them on my screen. There's your kind of the next one, and then we're, you know, 95 down from there. So just kind of using these, uh, you know,
I'm
big
hoping
quarters.
86 by the end of the month.
Oh my, yeah. Oh,
I'm going to Europe. And by the way, anybody who's thinking of traveling, like now is a damn good time to go travel.
now, yeah, for
Um,
real, man.
yeah, I'm gonna be
Um,
2 week. I'll be in Europe for 2 weeks, so it should be fun. Sub
that's
parity.
awesome.
Yeah.
That's awesome. Yeah, so yeah, especially like yeah, go to Europe, go to the UK. I was actually you know, the pound is just I mean, it's just I mean, it's just getting pounded, man. Like it's just like I just it's wild,
Hmm.
you know, even, you know, low breaking the lows from like the, you know, COVID meltdown. And this is like when the world was going to end and we were all, you know, zombies, whatever.
Yep.
And now we're even lower, you know, and it's just like, it's very, very difficult to, you can't, there's nothing I can really do to go back. Like you can't really trade, you know, thinking that you're going to find some supply area with unfilled orders from 1980. You know what I mean? Like that ain't out there.
Yeah,
I don't think that's
but if you look at that level, and do me a favor, since you're driving, make your chart a monthly, and let's go show that level all the way out to 1985. You know,
I don't think my chart won't go back that far. So you're going to have to take the wheel,
what?
man. And
I thought we look at the same charts.
I got it on TradingView, and I can't go back further than 1970. Oh wait, oh it is.
Who was correct? Was
Oh,
Merlin right
oh my God!
again?
It's
Inconceivable.
magical. It's magic.
So there's your
Yeah, look at
105
that.
level,
Yeah,
and you know, to David's point, if you look at that 105 level, he's absolutely
yeah,
right. There is nobody sitting there with a buy order for the past 37 years, right? There's just no, there's just no way it's still sitting there. However,
yeah.
you know, as this thing knifes down and they hear about Bill Gross buying the pound, there will be traders who look at that and go, 105, that's my target. And basically, it becomes like, in my opinion, it will become like
Yeah.
a Ouija board. You know, it'll automatically spell out what you want to hear. And my guess is we will probably see the British pound drift down to that 105 level over the next, you know, 6-7 months. And then you'll see a nice bounce because orders will come
Yeah.
back in and people say, I'll buy at 105. But there's nothing legacy in the system, of course.
Yeah, yeah. You know, it's 100%, man. It's just like you know, even just with some of the stuff that I'm just kind of sharing, yeah, I guess, you know, kind of saying before, this isn't these aren't really trade ideas because I feel fundamentally bullish on the pound all of a sudden. It was just more of like trying to get just those little
Wait, wait.
technical type plays, you know.
Let me ask you this, since, you know, last time you were very bullish on the pound, and of course the trend has convinced you otherwise. You know, in a situation like I'm looking at this British pound here, I'm all for you on that long trade at the bottom of the channel. Although you just know you're going counter trend, therefore it's higher
Right.
risk. You know, in a situation like this, you know, are you looking at some of those prior levels as potential shorting opportunities, like the 115 you got mapped out there, the 116.75? You know, are you gonna jump on the bearish side of this, or do you hold the
I,
bias and prevent you from getting short?
No, no, I would. I mean, honestly, man, I've been playing more with like channels and trend lines. Like I've always had the kind of like this price system as I've kind of shared it with you over our years of kind of doing these together. But you know, I had find myself kind of being a little bit more of a chart ninja than I used to, and maybe just because I've been spending more time at home, and you know, now I'm just like, oh, well, let me pull up a chart and actually do like real chart ninja, you know, type technical analysis. And that's where, you know, I started coming in with these different like, you know, trend lines and channels. And it's been that way. And I've just been kind of playing that way. That's why I also, you know, Jesus, even with this dollar yen, you know, kind of thing that I was kind of sharing earlier. I basically like I've tried this short twice, and now I've been trying to get a little bit more of like, active on like Twitter, and I've been kind of throwing some of my, trade and, ideas and stuff out there. So, when they don't work out, it sucks because I showed everybody like, hey, here's me wrong, and so like this is attempt one, basically trying to play off of a trend line that had been holding, since 8/11, not crazy old, but it was just kind of something where I thought I could get, from here. I was just trying to use these, and now that I kind of
250 pips is pretty good.
yeah, it's not bad, man. Like, so here's 75 in this area, 75, and so now it's like I was trying to kind of play the same thing, so I got this area up here. Didn't obviously I loved this, don't love this, but we'll kind of see from here. Like the Bank of Japan is going to it's going to determine either I'm going to get this or it's going to be on the other side of this trend line, and we are probably going to we're not even going to get through 145 if the Bank of Japan just kind of sits on its hands and been like, we still just don't care. We just don't care. That 145 to 150, that's could be a very real thing
in a short period of time. I mean, it could also happen very quickly.
That's the craziest part about how fast these currency pairs are moved. The Bank of Japan was saying, it really wasn't so much the way that they've been talking is like they don't really care so much at the exchange rate is what they say. It's just how fast how fast the yen has been depreciating is what's been causing, some of their concern. Like the moves are just too fast. And so like, I'm very interested to see kind of how, tonight is going to play out.
It's hard for me to think, and I would almost use the line from one of my favorite movies, Princess Bride, where the guy goes, inconceivable.
Right.
It seems somewhat inconceivable when you look at basic economics. And so if you get a finance degree, they'll tell you, you want to spur the economy, you weaken your currency, right? You get your currency as weak as possible, and that will really help your economy because your goods and services become more consumed by global consumers. That's one aspect of it. And I'm looking over what's going on with Japan, as I mentioned at the top of the program, and it's like I'm just shaking my head going, okay, well, if my US dollar buys 41% more, the people who live in Japan are going to be feeling this because the cost of goods and services have to go up. So it's inconceivable for me to think that there's no inflation going to be an issue. And the fact that their central bank is sitting on their hands blows my mind. I think you're right. I don't know if it's going to happen at this meeting. It should. But at some point here in the near future, Japan's going to have to raise at least to zero. Like get away from negative rates. I don't see them being aggressive and raising 75 basis points anytime soon. But it's the talk track about what they say about their economy. And of course, Jerome Powell's actions today are going to have a big impact on it. But man, they're like I was making fun of the European Union because they wanted the last to raise, right? They just started raising aggressively, and Japan's sitting there going, no, we're good. We'll just sit over here and sit on our hands. So I don't know. To me, it seems like a crazy problem that they're throwing at themselves on purpose, right? And meanwhile, everybody else is raising rates and trying to prevent that from happening, but not Japan.
Yeah, exactly. The whole thing is like, whenever the dollar, I don't know when it's gonna, like, I just felt like we was going to come here pretty soon, but I feel like, there's going to be some type of like violent correction. You know what I mean? Like, I do think it is going to be pretty violent, but I think that the kind of like the purest play on like this whole kind of central bank world narrative, everything like just now is the dollar yen. This is currency that dollar yen I was hardly trading at all or even gave it any real thought because I always kind of trade the dollar and the yen the same way. If I was buying things against the dollar, I was buying things against the Japanese yen, and they just were they moved the same direction. And then, this year when the whole central bank's narratives change, they're not in lockstep anymore. They don't do the same. They don't behave the same way. And the Japanese yen, it's like they just totally lost, like it's like safe haven, like it lost it, like it's like it lost its safe haven status. And I don't know, man. Like I feel like
you just roll with it.
I roll with it. But buying things against the Japanese yen, at these price points, I just don't don't really love that side of the trade at this moment. But maybe if Japan just does what it has been doing, well, then everything we've been talking about right now, just throw it out the window, because things are just going to march higher against Japan. And if the Bank of Japan does just sit on its hands tonight, you are probably right that it's going
Mm-hmm.
to, like, it will blast from here. I think the maybe just this whole Fed move right now is a bit muted, especially on this, for this pair, just because really right now, I think, right now it's this, what's Japan going to do? What's Japan going to do? So
Interesting question from Brian. Good to see you, Brian. He says, "Does the Swiss franc still work the same way?" I can just throw my hand up and say, I haven't traded the Swiss franc since they unpegged. Ever since they unpegged,
exactly.
I'm not touching that thing because of the chaos that happened that day. But are you a Swiss franc guy?
Hell no, man. I haven't traded the Swiss francs in, yeah, like 2015 or something like that, man. Yeah, since I'm just not a fan of the Bank of Japan, but like the Swiss does have a little bit more of kind of that. It still kind of has more of the safe haven status of the dollar than the Swiss. But I just like, yeah, I'm kind of the same way. I don't really like trading the Swiss so much because they're just, as far as like forward guidance and kind of the way that the central bank does its policy and everything, I think they're a little bit more of like surprise,
Yeah.
so not a fan,
And,
just
and if
not
I,
a fan.
and if I look at the charts here, part of what I'm looking for, and I think you are too, is who's the lead dog, who's the strong hand. And if I look at this, here's a weekly of the U.S. dollar Swiss franc, and you'll notice there isn't any real like spot. You look at this chart, and go, wow, that is a great trend. It looks like a lot of chop on a weekly, and I have these two red lines here where it was kind of a compression period between 2021 and 2022. Certainly, that could have been traded as a trend, but here's a weekly of the USD Swiss franc, and let me go over to USD JPY. I mean, that's the better horse. I mean, even British pound, right? You have beautiful trends. So even though I'm not a fan of the Swiss franc, I still wouldn't trade it simply because of its price action. Now, if the Swiss franc looked like the euro, I might change my tune and say, hey, it's got a beautiful trend going with it right now. I'm going to ride that one, which is kind of why I created that humorous graphic today. I don't know if you guys caught that one, but I had a funny picture of David riding a US dollar looking all smug. It should have made $100 bills, but I think I think right now as a currency trader, if you're not watching what the dollar's doing, then you're shooting yourself in the foot, because that's where the action is. I mean, there was a comment that came in here from Robert. Who says, "Is the pound falling because of energy price controls and cap?" No, it's falling because the dollar is absolutely soaring. Right? You go now. Certainly, there is some element of the issues going on over there in the UK with energy and price controls, capacity, and just, to me, political uncertainty. But when you look at it compared to the US dollar, that's the main reason you're seeing that British pound sell off as aggressively as it has been for the past year and a half. Crazy.
Yeah, yeah, it's the story of the dollar right now. Like, I don't really like to like I've been this way for so long, but like the only really things I even look at is, like, I look at things against the dollar, or I look at things against the Japanese yen, and the Swiss never, but as far as like pound pairs are concerned, like, I'm either trading pound dollar or pound yen. There's nothing else. It's either euro dollar or euro yen. There's nothing else. And I think it's like, I think kind of, I think for a lot of currency traders, especially ones that just are kind of starting off, they're looking at too many currency pairs. They're trading cross pairs, which I just think is just an expensive way to place bad trade. I don't know, man. I just like, you don't need all that, but I think that as far as just my opinion, like right now, dollar yen is the currency pair to probably be keeping the most eye on. Yeah, euro dollar, euro pound, but I still think, yeah, there's some downside. A lot of, definitely more risk to the downside, but you have to be careful chasing it, because it's gonna hit some price point somewhere, and there's going to be a pretty violent correction. So if you're, chasing dollar yen up, or you're chasing pound dollar down, you really got to have to watch your watch your leverage.
And make sure you got your stops in place because it can prove you wrong very, very quickly.
God, yeah.
Yeah, David says, is Japan holding a lot of U.S. dollars? They are holding U.S. dollars. However, they've been unwinding a lot of their dollar holdings, specifically with bonds. They used to be one of the largest bond holders, and now they're unwinding. China and Japan have both cut back significantly their buying. So I don't know exactly their dollar position. Certainly that would help them if they're holding a lot of dollars, but don't know the exact details of all that. How would inflation fare if the dollar was dropping instead of rising? Well, now we're talking macroeconomics, not necessarily spot forex, but to keep it simply, the higher the dollar goes, the worse it is for commodities. So the higher the dollar goes, the more likely commodity prices are going to drop, including oil, wheat, soybeans, corn, all that stuff. And that's all things being equal. That's not taking into consideration, weather events or shortages or things like that. But all things remaining equal, a high dollar would crush the price of commodities, and therefore you would see inflation decline. Generally, that's what it was. And when you have a weak currency, that increases consumption of those commodities, which would drive up inflation, which is what we had for a long time. The dollar was relatively weak, so was interest rates, which made money cheap. Blue Diesel, crypto's going on sale. We'll talk about crypto after I finish up here. And that's the same thing. Margaret says, if oil is priced in dollars, how does the rising dollar affect crude oil? It's choking it out. It's slowing down crude oil's ascent. That's what it should do. David, tell me about your focus series and what you got from a teaching perspective, so some of our viewers and students here may take a course with you. What do you got cooking?
Yeah, cool. I don't currently have anything on scheduled on the calendar at this very moment. With the Trading Academy, I still get to do my weekly group right now with my focus and kind of signature family. And I got invited to speak. I'm very excited about this at a conference in Dallas, October 20 to 21st. It's called Mastering the Markets Live. It's this iFlip event, but I'll be speaking currencies out there for anybody that's in the Dallas area.
Is that an online thing that they can attend, or?
You know what? I'm gonna find out. I'm gonna post some information about it on my Twitter. So if you don't mind,
what was
sharing
the event?
my handle there.
Sure. What was the event called?
Mastering the Markets Live. It's being hosted by iFlip Invest.
Okay.
iFlipinvest.com.
All right.
Mastering the Markets Live.
Yeah, I don't see anything here, but anyway, I'll share the Twitter handle for you, right? So they can all get your Twitter handle.
Yep.
And here is David's Twitter handle for anybody who might be a Twitter fan. I'll throw it in the chat for you. It is you're missing an @ sign, but it's Warner Dollar is his Twitter handle, so he'll post the information there on that one.
Give me a follow on there because I've been trying to get more active on there. I've been sharing some trade ideas. So if you see my trade ideas and you like them, give me a little comment or like something.
If you don't like them, comment too. Just be nice in the comments.
Exactly.
We like constructive feedback.
And if it's something that gets stopped out, don't curse me out. But it's something kind of have having fun doing right now. So
good. Well, I think it's been like 6 months since I've had you on this program, so I think I have to step it up a little bit. It's been a long time.
Yeah, man. Just every month, man. It'll be currency day, and we'll just hang out. And
well, we might have a lot more to talk about here the next couple of months because
I think so.
The central banks is going to start heating up. So we'll try to get you on next month when I get back from Europe. Sounds good to me.
Yeah, that's awesome, man. Enjoy that time.
I will. All right, David, thank you very much. I hope that your trades pan out well, and careful shorten that U.S. dollar Japanese yen. I got my fingers crossed for you because I'm out of it right now.
It's just a little correction, man. That's all I'm asking.
Just a small one. All right. Well, thank you so much for coming on the program today. I appreciate your feedback on riding that dollar wave. If you guys want to know more information, you can find out more at his Twitter handle, which is @WarnerDollar, or check out TradingAcademy.com, where he has a focus series as well. Thank you, David, so much. Talk to you soon.
Thanks, buddy.
Bye.
Take care, man. Later, bud.
All right, guys, that was David Warner giving us a little bit of feedback on U.S. dollar. Again, I think most of the traders I bring on are going to have that same relatively bullish approach towards the U.S. dollar. And it's one of those old adages, if it ain't broke, don't fix it. And that trend just keeps on trucking and trucking and trucking to the upside. So thanks, David, for coming on and sharing your thoughts. And I thought it was interesting looking the way he has his charts. I could almost hear the people through the chat just going, because it's so many lines on there. I thought it was kind of interesting. I'm surprised nobody commented on that, but there were so many horizontal lines. And what I love about David's style is it's utilizing quarters, dimes, nickels, halves, and just mapping all those zones and looking for retracements into those areas and using that in conjunction with supply and demand. It's kind of a cool way to do it. All right, blue diesel. Hey, Merlin, crypto is going on sale. Yeah, it's probably going to go down even more. Sad part about the crypto market right now is we have regulation. Some of the things I've been reading coming through Capitol Hill are talking about potentially banning stable coins in the U.S., which I don't think will happen. We just need clarity on it. But yeah, I'll look at the markets today. I had actually a couple really interesting trades today. I ended up selling intraday. Let me get the exact. It was on QQQ. I sold the 282 puts earlier this day, and I made $1.45. So I made one half of 1% for like a 3-hour trade going into that announcement, which is kind of crazy, but I gotta have a little bit of fun during the day. So let's start off with our overall markets, and then I'll run through the cryptos, and we'll finish off there. So here's how our day ended. NASDAQ taking a big beating, and you can see here in the hourly, I mean, it just got throttled and absolutely getting beat up. 2.13% slide. This does include the after-hours session, so this is including where we are right now. But what's really interesting about it is how it looked during the day. I mean, when we looked at their intraday price action right after Powell did his thing, you had a sell-off, you had some pop. Let me go to the QQQs. I think it's clear on the Qs on, let's say, a 5-minute. Right, you can see that it started up like it typically does. It knee jerks in one direction, then it ripped the other way, ripped up again, and then completely fell apart going into the close there on the Qs. And fortunately, I closed. I think I told you I had a whole bunch of 288 puts that I sold a week ago and got some great premium on that. I actually closed those out before the Fed came out. I just didn't want to have that much exposure because I had a lot of them. Still made a few bucks on that, which is great. And then made some nice money selling those 282 calls on an intraday basis. I usually don't make 0.5% intraday on the triple Qs, but hey, I'll take it. Overall, let's take a peek at the bigger picture here. 2.13% down for the NASDAQ. Where are we headed next? You're going to 280, which is going to be this low point that goes all the way back into July. And then you notice there's a couple smaller little levels, but the trend is your friend and continuing drifting down, drifting even lower. S&P down 1.96%. Same picture, although I would argue it's come into its 3,800 level here, which I would say is potentially a demand zone on that one. Here's your Dow down 1.82%. It also down right near this, at the bottom end of this demand zone, if you want to call it one. I think you're probably going to be looking at the Dow going all the way back to 30,000, which would be another 240 points down. We'll see what the fallout is from Jerome Powell's comments later on tomorrow, or tomorrow's trading session. Moving on up the list, I'll go to the Russell 2000, which is down 1.5%. It still is faring better than the other indexes because it has a lot further to fall to get to its demand zone down around 1650, but it was down 1.5% today. Crude oil also hurting, of course, because you had that beautiful move up in the dollar. 83.05, still a beautiful downtrend. Short them if you got them. Stay short. Bitcoin, now we move into the crypto world. Even though it was up 0.16%, it still looks really bad. Does not look good at all. I thought when we had this break above this little yellow box over here, felt kind of confident. It was making higher highs, higher lows, and all of a sudden on the 17th of August, 18th, it started to fall apart again and challenges demand zone down at 18,300 on the Bitcoin futures chart. Doesn't look good. We just cannot seem to get our legs underneath it. There's a lot of regulatory issues. You're hearing more and more about senators and legislators cracking down on crypto. So could be more pain here ahead for crypto. So if you have some money that you're thinking, hey, I want to buy in, hold off. I think you'll probably be able to buy in at much deeper prices here soon. And finally, gold. Gold was up 0.66%. It was up a lot more than that today. Had me actually pretty excited because I am currently long gold. I have calls sold against my position on GLD, so I'm happy either way if we get a big rally or even if we sell off. But either way, I'll be okay with gold. Right now, up 0.28% on gold. 1,675 is our finishing price there. And just for the giggles, we'll show you SLV, which also had a very nice day, up 1.86%. As you know, I have a large position in SLV, and I have sold calls against that position as well at 1850. So if I get a close above 1850 by October, which we probably will, my shares of silver will be gone, and I will be happy. Let's see. As soon as Powell finishes his press conference, the index is tanked. Yeah, Powell's press conference was a good one. I actually enjoyed his comments and the things he was saying and how he fielded some of the questions. But I'm going to save that for tomorrow when I have Bill Addis on the show, because I know Bill is glued to what the Chairman Powell says and just the different actions and things that happen behind the scenes that I may not have seen. So I'll save my overall comment. Or my overall comment was everything he said was pretty much what I expected. I thought he was a little aggressive on saying, hey, we're going to keep raising rates until we get inflation under control back to 2%, which, I don't think he needs to keep hammering on that 2%. Let's get it down to, let's say, 3. Let's work on getting it to 4, and then 3, and then 2. But he put that line in the sand of 2%, just like they did with the unemployment numbers when we had our housing crash back in 2008. They were saying, 5.5% is full employment. That's our target. Well, we got to 5.5%, and they kept on stimulating the economy until we got to 3.5% where we're at today. He was looking ice cold. He was looking like a tough guy. But we'll talk more about that tomorrow. Bill Addis will be the guest on tomorrow's show. So if you have any comments, questions, you can send those on in at TraderMerlin@gmail.com or go down below this video. Put your comments in the section down below. I will try to remove all the bad spamming comments and leave just those that came through. I have a couple questions I need to get to, but I am out of time and I have a whole bunch of stuff I got to do today. So we'll try to get to all those questions that you guys send in on tomorrow's show. Again, if you want to know more about David Warner and what he's up to, you can follow him on Twitter. It's Warner Dollar. I'm going to encourage him to use Twitter more, get people updated on what he's doing, and he's got all kinds of charts he tweets out and stuff like that. Or maybe take a class at OTA with him. So anyway, that's going to do it for me. If you guys want to know more or have questions for Bill Addis or myself, send them on in at TraderMerlin@gmail.com or underneath the YouTube video. That said, hope you have a fantastic remainder of your day. Curious to see what tomorrow brings, but I'll let you know all about it on tomorrow's show. Take care.